And Jonathan Katz is right here in studio with me from Panagos Katz Situational Investing. Good morning, gentlemen. Thanks for being here.
Good morning.
Jonathan, I said to you as we were sitting here, I said, please do me a favor and listen to Rick Wagner. Now, we hear now another $21.6 billion between Chrysler and GM, not including the international funds they're asking for, the funds from the Department of Energy. You had that look on your face as you were watching him. What was that look about?
Well, from our perspective, a lot of people have thrown around the idea that bankruptcy would mean a liquidation for General Motors. That's not the case. When you think about bankruptcy, it's really a tool for allowing a company to restructure operationally and, more importantly, financially under court supervision. So if General Motors were forced to use the bankruptcy tool, I think, provided they could raise the financing, the debtor in possession financing necessary to keep their operations intact and operating during the bankruptcy process, they would be probably in better shape than simply siphoning money out of the government without a bankruptcy.
Okay, so in other words, so Jonathan, then you believe that those who suggest 2 million jobs could be lost if these guys were to go out of business, those jobs, some, not all of those jobs, could be protected if debtor in possession financing was coordinated and put in place before they had to file for bankruptcy.
Absolutely. I mean, bankruptcy, Chapter 11 reorganization allows a company under court supervision to continue to operate. I mean, that's the entire point. The idea is to right-size a company's balance sheet to meet its current cash flowing capacity and its future cash flowing capacity, which is usually lower than it had been anticipated to be when the earlier debt was put on the company. But it doesn't mean a liquidation. It doesn't mean 2.5 million people are thrown out of work, and it allows the company to additionally right-size its operational profile during the process.
All right, Tom, let me go to you in Toronto. 2 points here. Number one is you're one of the countries that General Motors is appealing to in aid to up to $6 billion, one of 5 countries outside the United States. What does the viability plan look like for you? How will it impact your markets?
Well, I think, Alexis, we have a very diversified marketplace. Our Toronto Stock Exchange has a strong sector in the financial area, has a strong sector in the industrial areas, and as you probably know, we have a very strong presence in both oil and gas and mining. So I think we have a diversified marketplace. That said, the presence of GM and the other automakers in the Canadian economy is very important, and I think we will continue to watch what progresses with Detroit and the various stimulus packages with a great deal of interest.
David, you and I talked earlier about the risk to those 2 million jobs. You said it's essential that something happens here with GM and Chrysler. You had an opportunity to listen to a little bit of what Rick Wagner had to say. Is he convincing enough?
Well, he puts in isolation a very convincing argument why Chapter 11 would be a bad idea. Revenue, finance, all these things, and it's absolutely plausible. My worry is a very simple one, is that, frankly, General Motors has had 35 years to get its act together, and it hasn't. It's been making too many gas guzzlers, too many models. It hasn't streamlined. It's been given finance, it's been given help, it's been given assistance now for 3 decades. Does this really rationalized idea of cutting back, making 47,000 redundancies, selling certain models to China and other parts of the world, is this really going to be able to be done effectively and quickly enough? My suggestion, Alexis, is no, but I do understand the political and the humane ramifications for not giving it a whirl. I think we have to do it, but I think it's probably for the wrong reasons, and they're not commercial reasons.
Jonathan, you're in the distressed investing marketplace. You understand what it's like when something is on the cusp of distress or a Chapter 11. Just tell me this. A lot of people are speculating that the cost of bankruptcy and debtor in possession financing would be so much more than what General Motors or Chrysler are asking for now. Here's the problem I have. If they keep up at the pace that they've been asking the U.S. government for money here, I find it hard to believe that in the long term, the Chapter 11 refinancing option may not be the cheaper option. But you tell me, is that the norm that it's more expensive in a Chapter 11 restructuring?
There is no norm in this circumstance. We don't really have a game plan for government bailout like this. In most circumstances, a company that was relatively healthy and had operations that were more than liquidation value of its assets would go through a Chapter 11 restructuring and come out on the other side, provided they could raise sufficient debtor in possession financing and exit financing to maintain their operations. I think in this circumstance, I don't know why bankruptcy wouldn't be the more economical option. It's a tried and proven method of helping companies restructure their businesses. That's what we do.
All right, Tom, let me go to you, because one thing that clearly has a big impact on the Toronto Exchange there, and of course on the markets in Canada, is NAFTA and the free trade agreement. The president yesterday talked briefly about it while he was signing off on the stimulus package, and he said he'd like to reopen the discussions. Now, many there in the Canadian government are a little bit hesitant about that. Tell me why.
Well, I think we would be concerned about anything that touches protectionism in any way. We think the free trade across the border is very important. As a proponent of operating a marketplace, from our perspective, we really believe free trade even of securities between our marketplace and the U.S. marketplace is very important for the continued development of both capital markets.
All right, well, we're going to have to leave it there, gentlemen. I want to thank you all, David, Timothy, and Tom.
Pleasure.
Not Timothy, I'm sorry, David, Tom, and Jonathan. Thank you, gentlemen. I appreciate it.